All right, so it's raining NFOs in the market, but should you be the one investing in NFOs? If yes, then what's the kind of NFO you should be looking at? We are going to talk about having a satellite portfolio just in case you don't have your core portfolio set yet. Should you be making NFO a part of your core portfolio as well? To discuss all of this today on the show, I have with me Arnab Pandya, founder Money Edu School. Arnab, good evening and welcome to the show. So let's just first discuss about the reason why we are seeing so many NFOs coming in the market back to back. You know, we are seeing sectoral thematic NFOs coming up. We are seeing passive funds NFOs coming up. We've seen a lot of in passive index ETF. It's really catching up, you know, and investors are also showing interest in it. The numbers that we've seen, you know, of investors putting in money through NFOs and the way the equity inflow has gone because of that, it's really remarkable. But at the same time, what would be the reason behind it?
Good evening, Kavita. If you look at a normal bull market, and we are obviously in a very strong bull market which has run for quite a period of time, you will find that investor interest always increases in terms of where they want to put their money, how they want to allocate money towards equities. And in such a situation, NFOs become one of the key ways in which mutual fund houses attract more money from investors, because over a period of time it also gets difficult for them to ensure that the plain vanilla funds which they have, I mean, it's very difficult for them to attract investors, more and more investors towards this, and which is why you find that a lot of NFOs also come out during these kind of boom times. And the second point here is that a lot of mutual funds also have a few gaps in their portfolios. According to SEBI guidelines, now there are very specified categories of mutual funds across equity, debt, hybrid. And in most of the cases, a fund house is allowed to launch only one scheme in there. I mean, there are exceptions like sector funds, thematic funds, and other passive products. But if a fund house has a missing fund in its portfolio, then they use the NFO route to ensure that their portfolio consists of schemes across all these categories. And the third thing is that we are in a phase where there is a lot of attraction towards passive funds, and the boom in the passive space is being augmented by the fact that there are so many variations which are available in terms of sectoral indices and other options which are cropping up, and which is how and why a lot of mutual funds are also launching NFOs in this space to capture this kind of investor interest, which are in very niche areas. And as one can see, there is a lot of investor interest which is into translating into fund flows for all these NFOs.
Sure. So the fund launches that we are seeing are niche and, you know, and also very innovative themes. But the question is, should an investor actually invest in these NFOs? If there's an existing theme that's in the market already, then maybe you might want to go for an existing scheme. But then if it's something very new and exciting and, you know, which also has a greater outlook few years down the line, how should you be taking that call? Being someone interested in the theme, liking the theme, but not sure as to you should be making it a part of your portfolio or not.
So there are two aspects to this entire issue of selecting an NFO. The first thing is that if it is a normal plain vanilla type of fund, then you are obviously better off with existing schemes which are already in operation for a number of years in the market. There is a very clear reason for this. One is that you have a track record of this particular fund. So you actually want to understand how a fund manager deals with good times as well as bad times. So that track record is available for existing funds, which makes it easier for you to actually study them and see how a fund has dealt with various circumstances. The second thing is also that an existing fund has a portfolio in front of you. So you know exactly where your money is going. While in an NFO, the fund manager is going to create a portfolio in the future. So if you are giving money here, at the moment, you don't know where the money is going to go, though obviously you have a broad idea of the type of investments that the fund will take in that particular scheme. So it's always better for an investor to go with a fund which where you know what the portfolio is, where you know what the track record is, so that there is ideally a, a comfort level which is built up. Now, a fund which has brought in an NFO a few years back and has proved itself after a few years of operation, then that also can become over a period of time a mode of choice for the investor in their portfolio. So this is with respect to the way in which a investor can actually go and look at an NFO in terms of the basic investment philosophy. The other part is also the fact that an NFO which is in a niche product, I mean, it might be different, but the question then you need to ask yourself is whether this niche has a role in your portfolio or not, because not everyone needs these kind of separate or differentiated funds in their portfolio. It could be that that exposure which you are getting through a specific, say, a thematic fund or a sectoral fund or a specific ETF is already there represented through various other holdings of funds in your portfolio. So it's very important for every investor to take a look at their existing portfolio, see the kind of exposure they have, and if there is something which is not there and which is available through an NFO, then if you go for it, that's no problem with that.
Sure. All right. So we have a few names of the NFOs that are open currently. I also wanted to understand one case of having a concentrated exposure, maybe in a sectoral or a thematic NFO, which are also launching a lot, and also a case of over diversification, because you might also have schemes, different type of equity schemes where you might see an exposure to these particular sectors or themes. You know, for example, a defense sector or railway. You know, these themes are really doing well in the market. Also, talking about defense, we also have an index fund that created a good subscription, was able to accumulate a very high amount of subscription recently. But these kind of stocks are also there in maybe a large cap fund that you have. So how can you deal with this scenario of over diversification, and how risky could be the case of having a concentrated exposure to a particular sector via these thematic funds or the NFO which are launched?
This is a big risk which is there if you do not do your due diligence before investing in an NFO. Because, see, on the face of it, a specific sector or a theme might look very exciting. And it could be also that it's the flavor of the times in the market. So that might look to be different, exciting. But the question is, and you need to look beneath the hood of that particular theme to see what are the kind of holdings which are there in the portfolio. Because as you rightly pointed out, it is very likely that a lot of these holdings are already present in many other diversified funds. So, if, for example, you are looking at something like, say, an oil and gas theme or uh, say, an infrastructure theme, it's most likely that a lot of these stocks are already with a lot of these diversified funds, be it large cap or say a large and mid cap or even a multi cap fund. So the question for you then is that, is there a need for an additional exposure? Because what you are doing when you add such a thematic or a sectoral fund, when it's already, the exposure is already there in the portfolio, is that you're only replicating the, so your exposure to that area actually goes up, and you are not actually doing what you thought you were achieving by having this kind of niche theme. So always look at the existing funds in in your portfolio, see what kind of exposure you have, and if then those particular themes are missing, and then you go on to add this kind of a fund, then it's the right approach. Otherwise, it's actually a question of just replicating your existing investment.
All right. So now looking at the NFOs which are open, how should one take a call? I mean, we've really discussed about the kind of exposure one might want to have an NFO, and all the NFOs currently open are very niche and the innovative theme, very sector specific themes as well. You know, let's also look at themes like tourism. You know, is this the right time to have them in your portfolio? The NFO is currently open as well. I'm talking about Tata Nifty Index Tourism, which is quite interesting. Talking about this theme, we also seen the central government putting too much of thrust on this particular sector. Do you, how much of an exposure should one be having of these kind of themes in their portfolio?
See, one is obviously a new theme which might have come up, say some new indices might have been launched based on which a particular NFO has come. The question then is that what are the actual companies which are there in that particular index? Like, for example, this tourism index. That is the first question. The second point which you also need to evaluate is that whether this theme has already run its course, because one is that there might be an economic potential going ahead, but the market always moves first or early in anticipation of what is actually going to happen. So if all, or rather a major part of the value is already baked into the valuation of a particular sector or a theme, then you want to reconsider as to whether this is the right time to actually go and invest in that particular theme. So that is as far as a particular theme is concerned. You need to look at valuation and you need to look at whether it is giving you something extra in terms of the exposure that you are actually going to get. The second part of your question is to how much should actually go into these kind of funds. I would say that overall, whenever you are looking at your equity exposure, I wouldn't exceed around between 12 and 15% of the value of your equity portfolio into these kind of funds, because there are, you should first focus on the basic structure of your portfolio, look at the basic funds which are the core of your portfolio, and then when you have a large size portfolio, you have extra amounts to invest, then you can move into various additional areas. But too much of exposure is always also not good. So always restrict a total. I'm not saying a single particular theme should have this kind of exposure, but the various themes together should, I mean, in my view, I should not exceed this kind of 15% of your portfolio.
All right, so that will be all on this discussion on NFO ki Pathshala. And yes, a lot of NFOs coming up, but then one really needs to figure out their risk appetite and the need to have it in their portfolio as well. Thank you so much, Anna, for being on this one, helping our viewers with selecting the right kind of NFO for them.
If you like this video, then like, share and subscribe to ET Now.